and welcome to the first Target in Focus of the trading week. I'm Monica Gibson and I'm joined down the line by Arne Lohmann Rasmussen to share his and Danske Bank's FX top trades for 2014. Arne, the overarching reason behind Danske's top trades is the positive supply shock, which you expect to continue to be a main driver in the global economy. I understand you recommend positioning for some euro-dollar downside via a long dollar-Swiss franc position. What are you looking for from these trades and what are the potential risks?
No, basically this positive supply shock is that we believe that we'll see very low headline inflation in this year, 2014. And we believe that the ECB will have to react to that. We actually believe that they will cut rates into negative territory, that we could see very low European inflation here during the spring, and we believe that will weigh on the euro on the one hand side, and on the other hand side, we believe that the market will start pricing in earlier rate hikes from the Fed now when they have started tapering. I will see a steeper money market curve in the U.S. supporting the greenback. So of course the obvious choice from this view would be to be short euro dollar, but actually we also believe that the European peripheral, the bonds from Italy and Spain, Portugal will perform very strong this year. Will continue to perform strong this year. They've had a very strong start to the year already. We think they will perform. That will give support to the euro. So instead of being short the euro, we actually recommend being short the Swiss franc, because we see a potential that we'll see an outflow out of Switzerland. Remember, a lot of money was parked in Switzerland during the financial crisis. What is the potential risk to this trade? It's definitely that the Fed will continue to stay very soft, that we will never see the steepening of the money market curve, to just continue to say that we will keep rates low for a prolonged period, and also this support to the euro and indirectly to the Swiss franc from a better eurozone economy, from performance of the bonds in Italy and Spain. That is definitely a risk factor. So we'll see this euro performance that we witnessed in 2013 continuing in 2014, but we don't believe it will happen due to the inflation view we have.
You expect 2014 to be a year of divergence for the Bank of England and the ECB in terms of monetary policy, and therefore recommend selling the euro against the pound. Which key levels should traders be looking for this pair?
Well, again, it's a story about sterling strength. We have the strong numbers of the UK. Bank of England will probably say that they will hike rates earlier than they currently say, that the market will adapt to that. And on the other hand side, we have a very low inflation in the eurozone. We are in this trade looking for actually a target of 78 for euro sterling. So it's a 6 month trade that we think sterling will be able to perform for the next 6 months. So 78 for euro sterling is our target.
And finally, 2013 was the year of Abenomics and unprecedented monetary stimulus, with the Bank of Japan forcefully leading the way. Danske Bank expect this pattern to become even more pronounced in 2014. So how does this affect your outlook for the yen against the US dollar? How low can the yen go?
Dollar yen, we believe that will be a monetary policy divergence trade in 2014. We believe that we will see some weakness in Japan during the spring, and that we will see that the Bank of Japan stepping up their easing efforts, stepping up the monetary policy easing. And on the other hand side, as we already discussed with the euro-dollar trade, we believe that the market is pricing a too flat money market curve in the U.S. So a very divergent monetary policy there. We have the Fed moving towards a more neutral stance on the one hand side, and we have the Bank of Japan actually adding to a already very loose monetary policy. And we believe that the dollar yen will peak at 110. We 110, but we are a bit uncertain with the timing here. So we actually recommend doing a so-called straddle, to sell 110 straddle 6 months. So about 110, that is our target for dollar yen for 2014.
Arne, thank you so much for your time and perspectives today. Pleasure speaking to you. Well, viewers, that's all from me for the moment, but if gadgets are your thing, why not click back to the website for today's press review with Natalie MacDonald on the shrinking tech market. Goodbye for now.